Hey guys, how's it going? So today we're going to talk about the action that happened this week. We're going to talk about some technical analysis, and we're going to talk a little bit about identifying cycles in the market and overall trends, as well as money management review. This session should be about 30 minutes total. And as always, if anybody has any questions, feel free. So, guys, what happened this week was somewhat important to be aware of when you look at the market from a top-down overall perspective. There was some adverse signals happening. What we saw was on Wednesday and Thursday, the market was really choppy, looked to be really weak, sold off intraday. But the other things we saw was gold was down and rates were higher, or bonds were down as well. Now, usually when the market starts to look bearish, gold and bonds will rally. And those two things were doing the exact opposite all week, even though the market looked weaker on Wednesday and Thursday. And what ended up happening was bonds and gold were giving the true signal, because on Friday we saw the market close at all-time highs, and we almost closed above 2400, which is a very key level on the S&P. We closed at 2399, an all-time closing high. And we're very, very close now to breaking out and finally starting a new uptrend, which we have not been trending for the past 9 weeks. So we start trending again. That is the best time to make profits. It's the easiest time. You can hold longer, and it's just the best time to be trading, especially for people that are newer. Whereas the past 9 weeks, we were in a chop, sideways moving cycle, which can be harder for some people to trade if they don't identify that soon enough, because you need to adjust, take your profit sooner, and you really need to focus on trading the cycle. So, what do we first need to do always when we're looking at the market is we need to first identify the overall long-term trend. The best way to do that is to use the 50 and 200 simple moving averages and look at the SPX, or the S&P 500. So let's take a look here, and I will show you guys, give you guys an example. So what do we see here on the S&P 500? Now, this is the weekly time frame. We're going to go back to daily. We're talking about daily time frame for this. The best time to do this analysis, because these moving averages are catered towards daily candlesticks. So what we see here when we're first going in here to identify the long-term overall trend of the market, what we see is the 50 SMA, which is the blue, and the 200 SMA, which is the red, are both rising. The 50 is above the 200, and this is all characteristics of a bull market. Okay, so the overall trend is a bull market categorized by a rising 50 SMA, a rising 200 SMA, and the 50 SMA being above the 200 SMA. That is how we identify here that we are in an overall bull market. Now, within overall trends, there's going to be cycles where the market chops, and there's going to be cycles when the market trends. The past 9 weeks, the market has been chopping. And so that's where you start, right? So you start by looking at the overall trend. What's the overall trend of the market? If the overall trend of the market is we are in a bull market, in an uptrend, then generally speaking, you want to be looking to enter bullish trades when the market is weaker. So, like I said, within overall trends, there's going to be cycles where the market chops sideways, And then there's going to be trending cycles. Now, a higher percentage of the time, the market is going to be chopping. And the key to all this is identifying the cycle that the market is in as soon as possible, so that way we can adjust our trading and holding periods accordingly and still profit accordingly. So I backed this chart out much longer term. This is over a 2-year period. It's harder to see the candles close up, so I'm going to put this back to fill the chart, which is about 6 months. So, like I said, basically we hit an intraday all-time high on March 1st of 2400, and we spent the next all of March, all of April, and beginning of May just chopping sideways. And now we're finally starting to look like, after Friday's action, it's possible that we can start trending higher again and starting a new trend similar to what we did here, right? So we started this nice little uptrend pretty much beginning of February. So pretty much the whole month of February was the last time the market was trending. As we can see, we went from 2275 to an intraday high of 2400 and then chopped around for a while. So now it looks like I said, the market is finally getting ready to trend higher. And the first thing we should always do when we're doing our analysis at the end of the week is look at the weekly chart of the S&P 500. And as we can see, like I said, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 weeks of pretty much not going anywhere. And now we're finally in week 9 looking like we want to break out and start a new trend higher. So we need to be aware of that this week. My plan going into the week is to be looking to buy into any weakness on Monday or Tuesday, expecting the market to start this new uptrend and this new cycle of bullish price movement. And the other side of that is if the S&P cannot hold 2380 on the daily, if it closes below 2380, then that plan changes because the market is no longer looking like it wants to break out. Okay, so when we're in a non-trending cycle and the market's chopping, the best way to adjust is you need to take your profits faster because the market's usually mean reverting, meaning if it goes in one direction, it's going to come back in the other direction. So it's best to take your profits when you have them. A lot of movements in a non-trending market don't make much sense. And it's also best in general in a market that's not trending to make less trades. Okay, especially as a beginner, make less trades. And really just wait for the next time the market starts trending because that's when the easiest money is to be made. So in a trending cycle, it's a little bit of the opposite. You can hold for longer time periods. You can be more confident with your trades knowing that we're in an uptrend or a downtrend. And it's a lot smoother of a ride. So this is something that we could have started being aware of in this area here, that the market was no longer trending. We're kind of in a chop cycle. So about 3-4 weeks in, it was really clear. And now finally, like I said, we're starting to look like we want to start trending higher depending on what happens this coming week. The other thing to note is always be looking at the VIX, I'm going to walk you guys through my analysis of everything that I always look at every day. But the VIX, when it's anytime it's below 12, that's bullish for the market, signals there's not a lot of fear. Okay, so the VIX is definitely working in the bull's favor. Below 11, that's very low. A couple times this week, the VIX actually went below 10 and was in the 9s. Now, that is actually the first time I have ever seen the VIX this last week was the first time I've ever seen the VIX below 10 in my whole trading career. Because the last time it happened was like 2007. I wasn't even, I was graduating high school in 2007, so I wasn't really involved in the markets then. So yeah, that is something interesting to note, is that the VIX really went below 10 this week, which is pretty impressive. And basically what that means is there's less fear. There's also less participation. A lot of people, they sell in May, go away. Getting ready for the summer months, there's usually less activity going into May, especially June and July. June and July are very slow, usually very slow months for trading, very low volatility. And it looks like it's starting a little bit sooner this year in May. So let's see here. Okay, so I talked a little bit about last week's action. Let's see if there's anything else that I want to talk about. Okay, so last week what we saw in the beginning of the week, on Monday, the market was very strong. And a lot of that can be attributed to that was the first trading day of the month. So that was kind of a little bit of a fake out, because the market really rallied strong on Monday and then really faded the rest of the week until about, I think it was like the last couple hours on Friday, we finally saw some buying for the first time, since Monday. So, but like I said, when I show you guys the analysis that I do, we are going to see kind of the canaries in the coal mine. We're going to see that gold and bonds were selling off all week, meaning rates were going higher, and those are bullish signals, even though the market looked weaker. So yeah, like I said, we closed at an all-time high on Friday, and it's looking possible, like I said, we're going to start trending, and we do need confirmation. We want to see the S&P close above 2,400. And if we do start trending again, we should be able to get to 2,475 to 2,500 range. So that is pretty much last week's action. And I already talked about the plan for this week for me and for people who are interested in trying to ride the trend. Should be looking to buy into any weakness on Monday and Tuesday, assuming the S&P is not that weak and it doesn't get below 2380. We use 2380 as our point at which we do not want to add to weakness if we go below there. But if we can stay above there and there's a little bit of weakness tomorrow or Tuesday and into Tuesday, then we can be looking to put on some bullish trades under the assumption that it's looking like we're going to finally start trending again higher. Now, some things that happened last week in the news was the GOP, the Republicans, they passed the healthcare bill that still needs to get through the Senate. But it was, something that was kind of an important milestone for the market. The market was happy to see that finally they were able to come to some type of an agreement. Really, the key thing to come is tax reform. If that can get through, that should really help the market. We'll see, though. I think it's going to be very difficult for that to get through as well. So, but this is why the market is where it is. It's assuming that tax reform is going to happen. And it's assuming that the other thing we saw was Volcker, right? So there is a plan being made to ease Volcker regulations. It's assuming that regulations are going to be eased in the financial industry. It's assuming that tax reform is going to happen, and that's why the market is where it is. And so if those things don't happen, definitely expect weakness. But with all that being said, the first thing we need to look at is price and price action, and the technicals are telling us that the market is looking like it wants to break out and head higher. So with that, I'm going to show you guys everything I go through. We're going to do some analysis here. So, like I said, this week, and it was actually the past 2 weeks, the S&P was in a really narrow range, 2375, 2400, very narrow range. And this week, finally we got a close above the previous day's high on Friday. But there was definitely a lot of chop leading up to that. So I always start with the S&P. The next thing I like to look at is, I always look at, this is the NASDAQ 100, the biggest 100. So NASDAQ 100, tech has been really strong all along. It's been stronger than everything else, and it's still looking that way. And it's looking like it wants to keep going higher as well. Now, what we saw this week was small caps started to participate more. We were weaker in the beginning of the week, but the good thing to note is that even though small caps were weaker, it didn't really drag down the rest of the market that much. And Friday, we had a huge bullish hammer on the IWM, so it's looking like this little correction here is done, and the IWM wants to head higher towards 140 and test these highs here of 142. This is a very good signal, this candle right here. This is called a bullish hammer, and a bullish hammer is one of the best candles to look for confirmation that that price is going to move in the opposite direction. Right, so here we had this sell-off, then we get this hammer that's showing us that it's likely that IWM is going to reverse course and start trending higher again. We will see this coming week, but that was something I was noting earlier in the week, was that small caps and IWM was a lot weaker than the rest of the market. Okay, and small caps, you always want to see small caps when in any trend, you want to see small caps participating, and most of the time it's good to see small caps as one of the leaders, and usually that's how it works. When the Trump rally began, small caps were the leaders. The other index is IBB, biotech. Always like to be aware of that, and there's really been no trend in biotech, but if biotech can start trending higher again, that's really going to help the market get to its next level. And also the Dow Transports. Same thing with the transports. See, the transports started perking up on Friday as well. Really want to see the transports and the small caps start rallying, start trending higher, and that's really going to help the whole market as a whole make that next leg up. Whereas the SPY and QQQ, they look a lot stronger. IWM and IYT, they look a bit weaker, but on Friday we got a good sign looking like they want to start rallying, which will definitely help the market get to all-time highs. So those are all the indexes I like to look at. The S&P, the QQQ, the IWM, and IYT. IWM is my favorite index ETF to trade. It does have the highest IV out of all the index ETFs, and the options are very liquid on it. So after I look at all the indexes, now the next thing I look at here is bonds. And as I was saying, bonds and gold. So what we saw was the market looked weaker at the beginning of the week, but the TLT was selling off, meaning money was not going into bonds. Usually when the market is looking bearish, money will go into bonds, meaning if the market's looking bearish, the TLT should be going up. But the market was bearish and the TLT was still going down, meaning money was coming out of bonds, rates were going higher, and we saw the same thing happen with gold. So when you see that, when you see the TLT and you see gold, these are kind of pretty good fair indicators for the market as well as the VIX. When you see both of those getting a lot weaker, you know there's money coming out of gold, you know there's money coming out of bonds. Well, that money has to go somewhere. Now, some of that money definitely went into Bitcoin because we saw Bitcoin this week hit all-time highs. And one Bitcoin is now worth a lot more than 1 ounce of gold. So that is interesting to note. So some money did go into Bitcoin, but we can assume that some money also came into the equity market, into the stocks, and it was looking like that on Friday, and it's possible that these indicators here, gold selling off and bond selling off, can help lead the market higher, because when that money needs to come back in somewhere. So that's kind of what I was looking at earlier in the week. We saw gold selling off and bonds selling off, and that's usually bullish. So even though the market didn't really look bullish, we were kind of getting mixed signals. And as we can see, gold has really broken down. Gold is now below its 50 SMA. It's now below its 200 SMA. I think gold is going to go back and test 1200. Let's actually look at the actual chart of gold, not the ETF. But I like to trade GLD when I get involved with gold. I'm not a big fan of trading the miners or the leveraged things the leverage minor ETFs and options on them. I think for me, that's a little too volatile, a little too crazy. So I usually just go with GLD. Sometimes I'll do something on GDX. That's about it. But what we see on gold here is gold, like I said, has really broken down. Almost came close to that 1300 level. Now it's crossed below the 15200 SMAs. And it's looking to me like it's going to come back down to test 1200 here. It's really broken down. So that is gold. Now, after I get my picture of the market, and then I'll also, like I said, I look at the VIX, right? And the VIX also goes right in line with the bullish stance, right? Being below anytime the VIX is below 12, that's bullish, but being as low as in the mid 10s, that's pretty bullish. That's even more bullish because it's saying that there's even less fear. The VIX rises when there's more puts being bought in the market, meaning there's more fear in the market. So this also lines up as being bullish. Once the VIX gets above 13, that's kind of, when things shift a little bit, and then above 14 is when there's some fear. You can see that there's a little more fear in the market than normal, but here it's just telling us, all systems go for a bullish stance because it's so low. So after looking at all that, then I like to look at individual stocks and some stocks that I really like still for this coming week. Definitely Amazon. Amazon is a stock that we've been trading a lot at the Cinerelli Exchange, and it's just looking like it's flagging here. And if the market goes to all-time highs and we start trending higher again, Amazon should definitely be participating and hitting all-time highs. So yeah, I like this chart still. I also still like Wynn, as I cited multiple times in the chat. Gross gaming revenues in Macau are growing again, are growing at a pretty fast pace, and that's going to help all casino stocks. Wynn is my favorite. It is a pretty volatile stock, and what we saw, this can also be considered a hammer that happened with Wynn on Friday. Still well above the 15200 SMAs, holding the 17 EMA. And also Tesla. Tesla had a huge move up on Friday after the sell-off after earnings. If we get going again, Tesla's probably going to shoot higher. The bullish price action on Tesla on Friday definitely needs to be noted. It closed above the previous day's high. So anytime you close above or below the previous day's high, that signals there's likely going to be follow through. So Tesla on Friday closed at 308.55, which was above Thursday's high of 307. So it did close above Thursday's high, and it did close above the 17 EMA. Tesla looking like it probably just going to snap right back, head towards 320, 325. And so those are the stocks I have on my radar for this week that I'm looking to open some positions on if the market is weak on Monday and Tuesday. And I'll always start with small positions, and as they start to work, I'll add to them. I never get into my positions all at once. But I do think that the market is getting ready here to make another leg higher and finally start trending again after these 9 weeks of consolidation. So yeah, and these are kind of the stocks that I've been looking at the most. I also want to share with you guys a decent technical system here that is pretty good to use for people that are newer and even for people that are more experienced. So I have two indicators on this chart. I have the TTM squeeze and I have the PPS. This is Person's Pivot System. So the PPS is the yellow. These arrows give you signals, right? So this arrow here is giving you a buy signal. And I think that these two can be used together. Now, using the PPS as the trigger to buy or sell, and then using the TTM squeeze as confirmation, right? So here it's giving us a sell signal. The TTM is giving us confirmation. Here it's giving a buy. Now, obviously, it's not going to work every time. There is going to be some chop. But here, the thing is, we know we're in an uptrend. So the best trades to be looking to enter are bullish trades, right? So as you can see, the bearish trades are more choppy, don't last as long. Whereas the bullish trades, some of these worked out great. Like here, this cross buy signal, and the TTM stayed bullish for all that time, right? Now, obviously, there's a little bit of chop in between, but this first signal and the TTM staying bullish was what could have been a nice way to ride the market higher based off of these two signals. You know, this looks like a pretty decent system that somebody could develop. These are 2-hour candlesticks. I think that's a good time frame to use. Intraday, because we hold, you know, our positions, we hold anywhere from a couple days to a couple weeks. I think a good time frame to use, if you're going to use an intraday time frame, is still has to be on the longer term, where I think 2 hours is a really good time frame to use intraday for anybody trading the same type of strategies that we use at Santarelli Exchange. And also, the longer term you go out, the better the signals are, the less responsive they are, making it more accurate every time you get a signal. If the shorter the time span on your price candles, the more chop you're going to get in your system if you use something like this as kind of an idea. In another example, good example here, this arrow, see buy signal and then confirmed by TTM with the bars. Now, I know that you're supposed to wait till the dots get green, but this is enough to confirm. You know, you get the trigger buy signal here, and then TTM is confirming here with these cyan bars that price action is bullish. And yeah, so this is a great example of a nice one here that would have worked. And sell signal here. You could even start to sell when these bars go dark blue, because it's showing that momentum's kind of waning. So yeah, I mean, that's and now the other thing here is I have on this chart the Fibonacci's that I measured from this swing low to this swing high. Amazon hasn't even made it into the retracement zone yet, and it might not. This might be all we get, but this is nice. This is all this is right here. This price action that we got all week after Monday is just nice retracement, right? A nice retracement of the move up. This is the kind of price action that you want to buy into when a stock's in an uptrend. This is the time to be looking to put on a bullish position when Amazon is coming back down, correcting the overall uptrend. You always want to buy in to trends when they are correcting themselves, right? You don't want to be buying into the trend, chasing it at highs. You'd rather buy in lower, assuming it's going to continue trending higher and catch more of that movement. And that's the PPS study and TTM squeeze on a 2-hour time frame. Those are those tools. So does anybody have any questions? Yeah, it's PPS. It's PPS and TTM. I'll share these slides in the chat so you guys can look at them. I put them here. The PPS study and then the TTM squeeze. So this is the TTM squeeze and then this is the PPS. And I'm using 2-hour candlesticks, 2 hours intraday. $2. Okay, so again, let's review these money management rules here. What we have is, like I said, no more than 3% max in weeklies, no more than 3% in expiration between 7 and 30 days, and no more than 5% 30 plus days out in options. So basically, our full account exposure is 11% in our account. And even though we have 55% in 30 plus days, we're assuming that only half of that's at risk. Because when you go out 30 plus days, your positions are less responsive to the price moving against you, meaning you can assume that even though you have 5% of your account in options that expire 30 plus days out, you can assume that you should only be losing half of that if things don't work. Whereas if you go inside of 30 days, you should be assuming that whatever you put into that option is possible that you're going to lose it. So it's at risk. So it's just kind of changing what you have at risk here. You could buy 5% out 30 plus days and assume that you're only risking 2.5%. And even if you do somehow lose the 5%, you still only have 11% at risk. That's going to keep you in the game. So when the actual market does start trending again, like it looks like it may start doing soon, you have enough cash on hand still to make some nice profits, because the best profits are made when the market's trending. And like I said, that looks like that's going to pick back up again here soon. We will see. The confirmation obviously is 2,400 on the S&P, which we have not closed at or above 2,400 yet. But assuming that we do, it's likely that the market should start trending higher again, assuming that the S&P holds 2,400. So yeah, that is pretty much everything I have for today. Does anybody have questions? These indicators are only available in Thinkorswim. So if you have a TD Ameritrade account, Peter, you can get all that stuff in Thinkorswim. I highly recommend Thinkorswim. In my opinion, Thinkorswim is the best free platform out there. So yeah, those indicators you're only going to get from there. Anybody have any questions? We are a little more than 30 minutes in, so this is about what we want to keep the time frame of this video to, but it could go longer if we have some interaction. Okay, I don't see any questions, so to recap the key things we're looking at here this week, coming into the week, I'm going to be looking to put on some bullish positions into weakness on Monday and Tuesday, expecting that the market's going to start trending higher and finally be able to close above 2,400. Now, if we close below 2,380, that's when that plan starts shifting. If we can't keep above 2,380, that's pretty much, that's it for that strategy. I think that if the S&P can't hold above 2,380, it's likely that we're not going to get a breakout. We're going to start chopping again, and we won't be trending. But what we did see last week, like I said, we saw money come out of bonds, money come out of gold, and we finally saw the S&P close at the S&P did close at an all-time high on Friday of 23.99. It's an all-time closing high. So yeah, and really what we want to see here, and like I said, the good thing we really saw was small caps, right? Friday small caps put in a bullish hammer, and looking like small caps can start shooting here to the upside. That should really help the market make the next leg up if IWM can bust above 142 and keep going. That's really going to help the market. And the 50 SMA did act as support. So yeah, those are the things that I'm watching, the price levels that we're watching. And my favorite stock to be looking to enter into a bullish trade is probably going to be Amazon or Tesla. Tesla really can really get moving crazy. So yeah, it's probably going to be between those two for me, Amazon and Tesla. Looking to open some smallish bullish positions and then add to them as I get confirmation that they're working. And yeah, so that's kind of the plan for the week. All right, Peter. Yeah, I'm not sure if Interactive Brokers has those indicators. Not sure. So, all right, guys, that's going to be it for today. I will see everybody in chat tomorrow. And yeah, feel free, as always, in chat too. If you have any questions, happy to help. Everybody enjoy the rest of your Sunday.